Stocks swing back up after two down sessions, with the market breadth turning distinctly positive. Realty, metals and FMCG lead the charge.
Tech Mahindra's growth picks up and profitability sees a marked improvement. But while the IT major reiterates its guidance for FY26, it tempers growth expectations for FY27.
Hyundai Motor India elevates COO Tarun Garg to MD and CEO from Jan 1st, 2026, making him the first Indian to lead the South Korean automaker. This even as Hyundai plans to invest 45,000 crores till 2030 on product R&D and capex, eyeing 1.5 times sales by 2030, with margins in the 11 to 14% range.
Persistent Systems delivers a near-perfect quarterly show after outperformance on both revenue growth and margins. It also guides for further margin expansion and reiterates its $2 billion revenue by 2027 ambition. The stock jumps in trade. Hello, good afternoon. You've tuned into Halftime Report coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me is Ekta Batra as well. Ekta, good afternoon, and it's surely a good afternoon coming in for the markets as well. 25,300 Nifty's come back to that mark. Sustaining this level is something that we're keeping an eye out on. 0.6% of gain there. Broader end of the market, that's also doing well today. So more than 1% of gain. So not much of a worry in terms of portfolios that come in as well, because broader end is doing well.
Hi, Vinny. Yes, absolutely. You know, the Nifty's reclaimed 25,300, and what we are seeing is all-round gains. We're seeing gains come through in terms of all of the sectors at this point in time, and the market seems to be rewarding good earnings. So, for example, we have Persistent, ICICI Lombard. Both of these stocks have surged anywhere between 5 to 6% at this point in time. So, a lot taking place in terms of the PSU banking space as well. So, just watch out for that, because yesterday we did see the signs. We saw the PSU Bank Index, in fact, end in the green in yesterday's trading session. So it's really building on gains in today's trade. So up around 1.5% on hopes with regards to possibly a government consolidation plan. But nonetheless, we do have our movers and shakers segment where we track a whole host of stocks which are buzzing in trade. And first up, we have Rima joining in on TechM. The company's FY27 goal is of revenue growth, which is higher than peers, with EBIT margins of around 15%. Rima's here with me.
Indeed. So while the company did reiterate the broad FY27 growth numbers, growth expectations, and it did well in Q2, the stock could be lower on account of, the fact that in FY27, growth is not going to be great. In fact, the company themselves lowered expectations for FY27. What they said in the press conference is that FY27 to be better than FY26 from a revenue growth perspective, but the revenue growth rate will be slower than the earlier expectation on the back of macro uncertainty. Also, the company analysts point out that, for the company to achieve industry-leading growth in FY27 appears to be a bit challenging. So CLSA says, and I quote them in the report, the bigger ambiguities around the company's ambition to grow higher than the peer average in FY27. FY26 revenue growth seems to be in line or lower than peer average. BofA expects the company to do flattish growth this year and just about a 3% growth next year. On the margin front, though, the analysts like the progress. CLSA says the EBIT margins today are 12.1%, and getting to 15% does not seem very arduous. For the full year, FY27, BofA expects EBIT margins at 12.7% and an expansion compared to the 12.2%. So the margin performance is fine. It's just that on the revenue growth, FY27, it just appears that the company has toned down certain expectations, and that could be weighing on the sentiment today.
Okay, Rima, thank you so much for that. Surely keeping an eye out on TechM. But Ekta, you're keeping an eye out on Thyrocare as well, and this is after its numbers, right?
Well, yes, I'm looking at Thyrocare because it reported what was a good set of numbers this time round. So I'll just take you through what they reported. The revenue was up around 22% on a year-on-year basis, and it was a 12% growth on a sequential basis. We had margins which expanded to around 33% versus around 27% year-on-year and 30% Q-on-Q, and the profit was up around 80% year-on-year and 25% sequentially. Now, the main bread and butter business, which is basically pathology business, saw 24% growth year-on-year to 202 crores. franchise revenue, which is basically opening franchises on the Thyrocare name, was up 20% year on year. The company, remember, is also debt-free with a net cash of around 190 odd crores. What also enthused the market is that the company is going to be issuing bonus shares at around a 2:1 ratio and has declared an interim dividend of around 7 rupees as well. So all-round positivity which is coming in for Thyrocare. But let's go back to Rima because she's looking at Persistent Systems, which has gained over 6% after its Q2 numbers. Rima, tell us more.
So, JM Financial calls Persistent's quarter a near-perfect quarter. Nomura says it's an all-round performance in Q2, while CLSA has a high conviction outperform rating on Persistent. Now, the company's done well. It's beaten expectations on revenues and margins. Revenue growth is 4.4%. And if you look at the dollar revenue growth, it's been above 3% for 22 straight quarters. That's phenomenal consistency. Margins too have expanded by 80 basis points to 16.3%. The company is guiding for 100 basis points margin expansion this year, FY26, despite the wage hike which kicks in 1st October, and another 100 basis points expansion in FY27. Brokerage view is positive to neutral. So the bullish calls are from JM, CLSA, Nomura, HSBC have a whole neutral call, and Ambit has a sell call on the stock. Now, the reason why Ambit has a sell call is because valuations are on the higher side for Persistent, and according to their calculations, close to about 42 times forward multiple. But CLSA likes the story because this is a company, according to their calculation, growing 29% EPS over FY25 to FY27, and JM Financial likes the consistency.
Okay, all right, Rima. Thanks very much for that. Well, we now have Upasana who's joining in on Cyan DLM. The stock is under pressure. She's here to tell us more. Upasana.
Well, overall, it was a weak quarter for the company. Revenue and PAT missed the street estimates, but margins were largely in line with what was the street estimating. Now, coming to the revenue first, it stood at 311 crore with a degrowth of 20%. Now, this revenue growth was impacted by completion of a large order, is what the company has indicated, and the defense segment saw a Y-on-Y degrowth of 90% due to a large order completion, which is why it impacted the overall revenue of the company. EBITDA stood at 31 crore with a downtick of 1%, but EBITDA margins saw an uptick of nearly about 191 basis points at 10%, which was largely in line with the street estimates. Now, EBITDA margin mix was mainly skewed towards the company's aerospace division, which now stands at 37% of the overall sales. Now, coming to the PAT numbers, mind you, this time there was a one-off this quarter of nearly about 9.5 crores due to the other income gain, which is why the normalized PAT is perked up. But if we look at the PAT numbers correctly, it stands at 12.6% crore, which is down nearly about 18%. So in terms of order book, if we see, the order book has seen a growth of 16% on year-on-year basis and a sequential growth of 7%.
Okay, Upasana, thank you so much for that. But on that note, we're actually going to slip into a very short break. We'll get you more on the markets and focus on RBL Bank as Emirates NBD eyes 60%.
Welcome back. Well, for the markets, it's A good day, you'd have to say. So the broader markets are showing much more momentum. We have the mid-cap index, which is up around 1% and maybe we should pull up the small-cap index for you as well and see how that is doing as compared to the mid-cap. So the BSE small-cap index should come up for you, just about showing gains of around 0.6%. So a little bit of an underperformance as compared to the mid-caps at this point. The advanced decline ratio is an absolute opposite performance as compared to yesterday, where it was a complete dismal performance in terms of advanced decline ratio. So today it's clawing back. It's at around 2:1, 1,860 odd stocks advancing to around 944 stocks declining on the National Stock Exchange. But let's talk about specific stocks then. RBL Bank is in focus. Sources say Emirates NBD is eyeing around a 60% stake after factoring in the mandatory open offer. Ritu brings in more details on this important story. Ritu.
After Yes Bank SMBC, now we understand Dubai's Emirates NBD bank is finalizing a landmark deal to acquire majority control of RBL Bank, which will mark one of the largest foreign forays into India's private banking space. And the deal could be announced very soon, in fact, in the next few days itself. Remember, the bank is going to report its earnings this Saturday. So we could hear about this as early as that itself. Now, there has been this has been widely reported that the two have been in talks and that Emirates was a minority stake in RBL, but our sources indicate NBD, the second largest lender in the UAE, is going to announce a deal to acquire as much as 60% stake in RBL Bank, which will include the open offer component that, of course, gets triggered when the acquirer buys more than 25% stake in a company. Now, we further understand NBD plans to acquire this controlling stake through a fresh equity issuance by RBL Bank, which will be done through its wholly owned subsidiary. Now, this is important because the entire investment is going to be then directly infused into the bank, and also because RBL Bank's current foreign shareholding, if you look at it, it stands at more than 22%. So the fresh equity issuance to NBD is going to expand the overall capital base of RBL Bank to ensure that their stake remains within the regulatory FDI cap of 74%. Now, our sources also indicate the transaction is expected to be priced, like you were saying, in line with, of course, SEBI's prescribed formula without a major premium to RBL's current market price. Now, the transaction cannot, of course, happen without RBI's blessing, and we understand this change of control has received an informal nod from the regulator. Formal submissions, of course, will be made once the boards approve this deal. Now, while RBI is not going to relax that 26% voting rights cap, our sources do suggest the regulator will offer a glide path to Emirates NBD, allowing it to gradually bring down its shareholding in RBL Bank. Now, for Emirates, of course, which operates in India through its 3 branches, the acquisition will significantly deepen its footprint in, one of the top banking markets. And for RBL, of course, a globally recognized institution, massive capital infusion, and long-term ownership clarity.
Absolutely, Ritu. Thank you so much for that. But Sudarshan, RBL Bank stock also has doubled in 2025. What are the brokerages saying now?
So it's been one of the stocks of 2025. It's almost doubled this year, and in the last 3 months the stock is up almost 35%, and now seeing the today's move, currently it's up almost 4%. Now the stock has moved to the highest level since March of 2020. Now Ritu has given you the reason that why the stock has been moving higher for the last few months. Now, apart from this, if you take a look at the June shareholding pattern, there was a sharp increase in the stake of both mutual funds and FPIs. Mutual funds had increased their stake to almost 30% from around 15%, and FPIs had increased their stake to almost 17% from 14% that they held in March quarter. Now, brokerages also have come out with some notes, and these notes are mainly on the back of reports related to Emirates NBD's plan to buy stake in RBL Bank. So Citi has maintained buy call with a target of rupees 300 per share. It says ownership transition may mitigate near-term ROE dilution risk that RBL might have faced. Also, if Emirates decides to acquire 51% stake, there might be an infusion in the range of 18,000 to 19,000 crore. And if Emirates acquires 60% stake, infusion might be in the range of 21 to 22,000 crore. Also, infusion would lead to a 5 to 10% book value accretion near current market price. CLSA maintains hold call and target price is rupees 260 per share. It says ROA could expand by 25 basis points to 1.2% if this deal happens, and also ROE would likely remain unchanged at only 10%, and it would increase FY27 book value per share by 8% to rupees 318 per share. But after this recent move and all these things have happened. Interestingly, in the last 4 months, out of all the trading sessions, in the 90% of trading sessions, the stock has been in the F&O band.
Okay, all right. Well, definitely a stock which is very closely watched at this point in time. RBL Bank is the one that we're talking about. But now let's go across to Vivek, who has a whole list of all of the stocks that are buzzing around and moving around at this hour. Vivek, over to you.
Well, it's midday, and clearly, when you're looking at the advance decline ratio, clearly in favor of the advances and more number of gainers compared to laggards. Well, one particular sector clearly that's seen a bit of a comeback is the Nifty Realty Pack, almost 3.5% higher, and all of the constituents on the Nifty Realty Index doing very, very well. So have a look at Sobha, Godrej Properties, Lodha Prestige, good pre-sales numbers as far as Q2 is concerned, and strong outlook as far as the rest of the year is concerned. Most of the stocks doing quite well. RBL Bank, well, our colleagues Ritu as well as Solutions spoke about it at the day's highest point. Newgen Software, within the mid-cap IT pack, a whole host of stocks doing quite well after encouraging results, and Newgen on very strong volumes up quite significantly in the session today, almost 5% higher. And IREDA, day first day the company came out with its results, a good set of numbers, and today some follow-on buying seen after a brief intraday dip. On the other hand, quite a few stocks seeing some amount of selling pressure. BLS International, day first day down almost 11% today, some more follow-on selling seen. The MEA has barred the company from going ahead and for the next 2 years participating in any tenders. Also look at MapMy India, last couple of trading sessions up almost 20-25%, cooling off a little bit in the session today. And Cyient DLM, a muted set of numbers, both top line as well as profitability, missed estimates, and order book too slightly muted on the back of that, almost 5% lower is Cyient DLM today.
Okay, thank you so much for that, Vivek. We'll keep an eye on these names in the second half of the trading session as well. But let's move on to our Inside Edge segment then. And Yash will now focus on ICICI Lombard, which has been surging in trade. A good set of numbers that the company reported. More details with Yash.
Well, absolutely. As far as the stock is concerned today, seeing a very, very strong surge as far as today's trading session is concerned. And three important reasons for that move in the stock today. One is very strong performance coming in the second quarter when it comes to most of the parameters. Second, the weakness in some parameters, in a couple of parameters which has come, the weakness is a lot less than what the market had expected. And third, both these first and second factor coupled with the stock not doing anything in the last 3 months. I'll start with what has done very well for the company in the second quarter. The net earned premium, that has seen a strong growth of about 12%. Operating profit, that has grown by 13%. Finally, the profit after tax growing by 18%. In terms of segmental performance, both motor, retail health and group health have performed very well. There's a strong momentum in both these counters. Motor premium growing by 10%, retail health up 50%, group health growing by 15%. Now, the weakness is a lot less in some counters as per market expectation. Underwriting loss, that increased just by about 10%, and combined ratio went up by nearly just about 100 basis points, came in at 105.1. versus 104.5. As I said, strong growth in most parameters, lot less, the weakness is lot less in certain parameters. That coupled with the stock not doing anything in the last 3 months. In the last 3 months, the stock is in fact down 8%. Last 1 month, the stock is down 2%. So of course, the stock has been under pressure, and that, getting a strong push with the second quarter results coming in on a very strong footing today.
Okay, all right, Yash. In fact, let's listen into what Gopal Balchandra, who's the CFO of ICICI Lombard, had to say.
I think if you look at the combined ratio that we reported for quarter two, again, I'm just looking at it on a like-to-like basis for ease of reference. The quarter two of this year, the combined ratio was about 103.9% on an N basis. This number in quarter two of last year was about 104.5. So directionally, I think what we have been able to exhibit is an improvement in combined at a company level, and therefore the trajectory that one expects is also to continue to see improvement in combined playing out for ICICI Lombard. I think what we'll be kind of looking for is to try and see if we can get an alpha or a growth higher in the range of 100 to 200 basis points. I think that's what we would kind of largely be kind of working towards. But more importantly, obviously kind of staying focused on delivering profitable growth and sustainable return on equity.
That's all about ICICI Lombard as of now, managing to hold on to gains of 8 to 9%. But on that note, we're going to slip into a very short break. But a quick programming note that we have coming in for you all. If you're looking for big bets and market themes for the festive season, CNBC TV18 Access gives you a direct access to Helios Capital's Sameer Arora as he shares his winning market themes and actionable investment strategies. Ask your questions live on 16th of October at 2 p.m. Become a member today on the CNBC TV18 app or log on to cnbctv18.com access plans.
Welcome back. Well, let's get talking about the technicals of the market, considering that it's a good day of trade. Pritesh Mehta joins in to tell us what he's tracking this afternoon. Pritesh, hi, welcome to the show. 25,300 for the Nifty. What is the range that you suspect the Nifty would probably trade in for the rest of the week, and your call on it based on that?
Yeah, good afternoon. Thanks for having me. Now, see, I still hold on to my opinion, which I've been having since the month of June. These are the right time to look at index, look at the stocks, the stock pickers market. Since the month of May, Nifty is moving the range of 24,200, 25,500 and nothing beyond it. And after 6 months, we are still at the same range. Nothing much has changed. In last 2 days, we saw a bit of correction in market, bit of profit booking, but my customized index or even my my internals did not change much. In fact, the breadth of our market moved higher. So it tells us that there is strength in the market. Bank Nifty are outperforming continuously. Mid-cap this month has gone higher by 4.6%. So we have pockets of strength emerging. Apart from leadership index, some sectors are going well as well. So we had tires, we have real estate today. We have some PSU banks doing well. So it is setting up nicely for broader markets rather than index.
Mm-hmm. And Pritesh, afternoon, which are your picks that you're looking at in terms of trading strategies?
So yeah, the first one which we like is Adani Ports. Now the stock in the month of May 2025 gave a breakout about the downward sloping trend line on the pointed figure chart. Thereafter we have seen a series of bullish anchor columns. Now we can see ABC breakout in place. So we have buy for a target of 1600 and the stop loss would be around 1400. The second stock that we like is Poonawalla. It is a classic example of a stock which is in strong uptrend. The correction in this stock has been very shallow in nature since the month of Feb. And now what we have seen the bullish anchor column, and now we have witnessed it follow through also. So buy for a target of 620 and the stop loss would be around 500.
Okay, Pritesh, keeping an eye out on those stocks as well. Thank you so much for joining us this afternoon and giving us insight in terms of markets as well as the stocks. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere. On the other side, Manisha Gupta will be joining in with the chairman of a Gem and Jewelry Export Promotion Council to talk about commodities. Stay tuned in.
Welcome back. Joining us now is Kirit Bhansali, is Chairman, Gem and Jewelry Export Promotion Council. Mr. Bhansali, hi, thank you so much for joining in. Happy festivities to you. And this is the time that the golds and silver really are glittering. We've called you on a day when gold has hit yet another all-time high. First of all, your sense on the gold prices, and is that impacting India festival jewelry sales at all?
Manisha, happy Diwali, first of all. On your opening remark that all-time high gold, so all the pundits are failing now. I'm doing this story with you since last about a month. This is my third meeting with you. But all the experts are failed. So now anything comment on gold is not wise thing.
I absolutely get that, Mr. Bhansali, because all those targets that were put out for 2026 have been all achieved in 2025 itself, and gold prices still continue to rise higher. But is it impacting, and how much is it impacting Indian festival demand right now?
Very much, Manisha. See, it's now out of anybody's pocket. The price is today has touched 1,27,000, and nobody knows where it is going to stop. So definitely, it is hitting domestic market. Every consumer is waiting. They are very cautious. But even then, something is happening in retail store. I was talking to the Malabar and Kalyan people. They are showing a slowdown about 15 to 20%. But now only 4-5 days left for the season. This price will definitely help retailers.
Mr. Bhansali, when it comes to exports, we've seen better numbers come in. And when you look at the previous month, there has been a 3% increase. I mean, at these prices, even with US tariffs, you've managed to be able to export in the positive.
Manisha, it's nearly about 4%, 3.75 plus. Okay. It's nearly. So the rest of the market which we are exploring is supporting us. Although US is down by good numbers, but we're receiving support from various markets. And that is the result that we have increased 4% in this September month.
Oh, well, absolutely. Mr. Bhansali, when it comes to exports as well, what other countries are we looking at right now, and how much is the US down by?
The US is down by 40% plus this month. Yes.
And what other markets have done well for you?
UAE, Netherlands, UK, all the markets are showing little agreement.
Just coming back to the Indian markets yet again, when it comes to diamonds, how have you seen that industry do? Because there were concerns on whether or not this Diwali could be positive for this as a segment.
I tell you, the reason of diamond doing well is because of the high price of gold and silver. So people, consumers are shifting to buy diamond. Diamonds are stable. In fact, if you compare to last quarter, the diamond prices are little bit reasonable, 5 to 10% cheaper than last quarter. So the consumer are shifting their buying in this festival from gold to diamond. So we are seeing good increment in diamond selling.
Going forward, as a jewelry industry with where the gold prices are, diamond, as you said, is stabilized, even seen a bit of a decline. How do you see the industry approaching this kind of change, a dynamic one at that going forward?
You talking about domestic or exports?
Both ways.
See, domestic looks very dicey because of this continuous rise in gold and silver. Consumers are very confused, even the retailers are confused. But I see good demand now in diamond with our continuous promotion activity going on and people's interest also. So I see the good market in diamond jewelry in retail.
That whole story that the GST cut would perhaps get in more money in people's hands and you could see a spend coming in, is that playing out? It is playing out.
Yes, that is also one of the factors. Yes, you can count.
Also, Mr. Bhansali, you recently have had an MOU or agreement of sorts with the Maharashtra government about the Gem and Jewelry Park. What is it about, and how are you moving forward on that?
That's a good news for the state of Maharashtra. That's good news for the city of Mumbai. It will be a game changer. I met Maharashtra Chief Minister, and day before yesterday I met Uday Samant, also Industry Minister. They both are so confident, and they're offering every day something new for this sector. Their ambition is to make this city, and especially Maharashtra, the hub of jewelry. And they've taken a number of steps. I must congratulate them.
How do you see that progressing? I mean, is it over the period of 3 to 5 years as we go ahead from here?
Yes, as we are starting this new jewelry park work within 15 days, immediately after Diwali. And we have seen good response also in this upcoming jewelry park. The offers given by Maharashtra government is a great attraction for the jewelry park. A lot of people are coming across India to invest in this jewelry park. They are setting up their factories. We are talking with the top players like Malabar, Kalyan, all have shown their interest. So it's a rosy picture.
All right. Well, absolutely. As you said, Maharashtra or Mumbai, for that matter, could be the hub of jewelry. And there's a jewelry park coming in, which perhaps would be the first in the country. Mr. Bhansali, thank you so much for joining in. But before I give you over to you, Vinny, I want to get the gold prices on screen, because as we are talking, these are all-time high prices. I mean, these are the prices that the market has been talking about for the next year. But as we stand at $4,200 an ounce, this is a record. This is an all-time high price yet again. And a psychological level, clearly, because 4,100 people thought is a level we perhaps would not see before Diwali. But there you have it.
Before Diwali is... there's no time to go and buy, right? Diwali time shopping. I don't know. It's just becoming more and more expensive.
But how much is demand down?
So as he said, demand is down anywhere between 15 to 20%. But that's really coming in from various areas. But the expectation really is, you know, as everybody continues to say, our salaries or our money or wealth creation hasn't gone up by that way. But then again, institutional buying, HNI buying, family houses are really buying gold, and that really seems to be supporting it. So we started this year with $2,650 an ounce. We're trending at $4,200 an ounce. I mean, that's almost a 60% of a jump up that we've seen in gold.
Absolutely. Maybe next year would be a year of consolidation.
I really hope so.
So maybe it becomes a little more, affordable with the time correction. But thanks very much for joining in, Manisha, and taking us through that conversation. So yes, gold continues to be the big topic, possibly superseding, equities in terms of a topic of discussion for the year. We'll take a short break, but we'll get you more on the markets and a lot of stocks in focus. So stay tuned for that. There's some news on Paytm as well. We'll try and get you an update on that. Stay tuned. Welcome back. Well, for the markets holding steady, just want to point out a couple of stocks from the Nifty space which are standing out. So we have Nestle, which is coming out with its numbers. So that stock is up around 3.4%, doing well ahead of that this week. We have even a couple of others such as Asian Paints, which is holding up with a gain of around 2.3%. Just watch out for Infosys, which is also releasing its numbers this week. So that stock is down around 1% ahead of that. And we have IndusInd Bank, which will be releasing its numbers on this Saturday. In fact, we have a whole host of banks which will be releasing their numbers on Saturday. So it's definitely going to be a lot of focus on financials next week, or at least Monday, in terms of a results reaction. So overall, texture of the market looks good. We have the mid-cap index, which is up around 1%, and the Bank Nifty up around 0.5%. But Diwali is just around the corner, and here's a glimpse of India's top market masters, Vijay Kedia, Sridhar Sivaraman, and N. Jaykumar, who joined Mangala Malu for a Diwali music mehfil. Take a look.
The other asset class that I have been speaking about is gold. Yes. And there are a lot of skeptics in the market about gold. In fact, in the last 1 week, I've seen more skepticism on gold than anything else.
Are you really talking about skepticism in the gold? Because we hear, on the other hand, a lot of people actually saying, "Oh my God,
I buy it here?
Should I buy
silver
gold?"
So the people, I'm guessing that the people who missed out on the gold rally, they come out with, random data that, how gold has underperformed between 1980 and 2000. How gold is a very volatile asset class, and in most cases they sort of give out a dollar return number, whereas it is for the Indian investor, it is the rupee gold that matters. And as I've said many times, that gold actually is a store of value and also is a hedge against currency. People miss the hedge against currency. So if you go back to 1980, the rupee was 9 rupees. Today it is 85 rupees. So you've got a compounded return of 4 to 5% just on currency. So if I want to put it in a song, I would put it in this way. कोई सोने के दिल वाला, कोई चांदी के दिल वाला, शीशे का है मत वाले तेरा दिल, महफिल ये नहीं तेरी, दीवाने कहीं चल. कोई सोने के दिल वाला, कोई चांदी के दिल वाला, शीशे का है मत वाले तेरा दिल.
last 1 year, the Nifty has actually gained just about 4%. Gold is 60%.
plus, yeah,
60%. Silver is, I think,
silver
even
is,
also, yes.
better than
higher than that. So you had a nice repartee to that. What was that?
श्रीधर भाई को ये बोलना चाहता हूँ भाई कि ठीक है ये तो गोल्ड मैन है अपने बोल्ड मैन है तो मैं इनका बात का जवाब दूंगा कि ना चाहूँ सोना चांदी ना चाहूँ हीरा मोती ये मेरे किस काम के ना मांगू बंगला बाड़ी ना मांगू घोड़ा गाड़ी ये तो है बस नाम के लेता है शेयर ले बदले में सबके लेता है शेयर ले बदले में सबके ओरे साहिबा शेयर से सौदा नहीं
क्या बात
it's a nice contra to what
So, the next 1 year, how do you foresee the next 1 year when it comes to earnings, when it comes to the macros, when it comes to micros? If I had to ask you to bet on a few themes and a few ideas, what would they be for, say, summer 2083 when we hopefully gather once again for a mehfil?
So I'd like to talk about 2 or 3 sectors. My number one sort of bullish case is for banking. I believe that when any economy reopens up or opens up for foreign capital, banking is the first space that will attract money. So I think NBFC consolidation, money coming into private sector banks, more and more deals like the Yes Bank kind of deals, I think we'll get to see and hear over the course of the next few quarters.
The ones that have fallen so far? Or?
I think it's not a question of follow. I think these are platforms that can't be replicated. Like NBFCs, there are infinite number of NBFCs in a manner of speaking. But there are a finite number of banking licenses, no new licenses to be given. So I think banking sector could attract disproportionate amounts of capital as people, especially foreign banks, come in to take stakes in the Indian context. I think that's going to be a big theme going forward.
Welcome back to Halftime Report on CNBC-TV18. Nifty as of now is at the day's highest point, 25,327. 0.7% of gain is what we're seeing coming in for the Nifty 50. Let's pull up the broader end of the market. The Nifty mid-cap and small-cap also is managing to hold on to gains. Nifty mid-cap more than 1% of gains for the Nifty mid-cap. Small-cap is also holding on to gains of almost 0.7 to 0.8%. PSU banks, that is something that has picked up pace, especially in the last 1 hour as well. Keep an eye out on that. But with that, we're going to wind down this edition of Halftime Report. Thank you so much for tuning in. Up next, your Business Lunch.